All right. So good morning, everyone. Welcome to today's webinar, Supporting Equitable Funding, featuring the managing directors of the Black Founders Matter Fund. We're glad you joined us. I'm Kara Toronto, the Chief Operating Officer at TAO and apparently the Chief Makeup Artist too. I'm joined by Ruthie Ditzler, TAO's Marketing and Regional Programs Coordinator, who's going to provide our back-end Zoom support. I think we're all Zoom etiquette experts at this point, particularly given that Jane is giving shout outs to filters that we can use for smoothing out our face. But in case you have not been very familiar with Zoom, here are a few guidelines before we get started. All of y'all have been muted, so just remain on mute unless the TAO staff member unmutes you and calls on you to talk. I think we're all familiar with dogs in the background, yard work happening, children wanting to attend, all welcome, but easier if we're muted so our speakers can get through uninterrupted. So you can ask or respond to questions like our makeup discussion in the chat box, publicly or privately, and you can direct those messages to Ruthie if you would like to stay anonymous. She's going to monitor that chat box to make sure all of our questions get answered. And if you're feeling stoked or want to support our guest speakers, we encourage you to give the participant icon, use the participant icons to applaud or give a thumbs up. We also take emojis in the chat. That's become one of my new favorite ways to interact. Engage with us on social during this call and throughout the day. We love to share what's happening at TAO and get participant takeaways from our events. And if we run out of time during the Q&A at the end of this event, we'll share Marceau and Himalaya's answers to any unanswered questions in Mobilize, our virtual community for TAO members. Should you have any questions about that platform or joining TAO in general, please reach out to membership@techoregon.org. All right, there's the intro slides. Now for the real meat of the program. It's my pleasure to introduce our guest speakers, Himalaya Rao and Marceau Michel of Black Founders Matter. I have to take a small aside. Marceau was the first person I met in Portland outside of the TAO staff, and I actually met him in Atlanta in 2018, and he gave me a very warm welcome to the city. So it's taken almost 3 years for us to work together, but I'm really excited to be sharing a stage with him for a very small amount of time today. Marceau announced the Black Founders Matter Fund back in 2018, coincidentally. He was drawn to creating a fund after experiencing firsthand the difficulties of fundraising in a biased investment world. The fund relaunched in early 2019 after Marceau teamed up with Himalaya, a venture capitalist consultant, an omnipresent venture capitalist consultant is the way he described her in our pre-event chat. In Himalaya's experience sourcing and screening investment opportunities for 7 different venture funds, she realized even when there is a willingness to diversify the portfolio, there are significant barriers to achieving that outcome. So since the relaunch, the Black Founders Matter Fund has received a $350,000 investment from the Oregon Growth Board, and Marceau and Himalaya have created the Include Venture Group, which aims to target specific communities with multiple funds that help historically underrepresented founders find capital. They're now up to $2.5 million in committed capital. Congratulations. And we'll let them fill you in on all of their exciting plans and a little bit of background. So I'm going to hand it over to you two. Take it away.
Thank you, Kara. Thank you so much for that wonderful introduction. And thank you so much to everyone that's on this call and for joining us to have this discussion about equitable investing and what that looks like. And so Himalaya and I want to thank you so much for being on this call and for listening. We're really excited to have this discussion. I think a really fitting place to get started with talking about equitable investing is really, I'm going to start with a bit of my story. We got to a bit of that with Cara, but I'm going to tell you a bit of my story and then kind of go into, what it is that we've learned, because that's mostly what this is about the things that we've learned in the process of being equitable investors. My story as an entrepreneur got started back in 2016, right after the election. I realized that I had to take control of my own life. I couldn't leave it to the rest of the world or the country to make good decisions for me. And so I decided to go and pitch an idea I had for a startup at Techstars Startup Weekend. It had come to Portland. It was happening over at Picasa. And so I got a ticket. I pitched my idea, worked maniacally on it for 54 hours, and then you present, right? And so I presented it, me and my team, we presented it, and I won the event, which was this huge boost of confidence for me as, as a person, as an entrepreneur, of like, you have an idea and this thing is working. And, I had a really capable team that, had been working in the startup space that were like, we want to work on this with you and continue to work on it post the event. So after the event, all of a sudden I had a team of 5 working with me on building out this really incredible product. But like all startups, we needed capital in order to effectively and efficiently create the product that we needed. And I was someone that wasn't aware. I'd come in so bright-eyed and bushy-tailed to the space that I wasn't aware that, like there are inequities here. I was like, I'm gonna come in and I'm just gonna like, I'm an outlier. I'm gonna come in and things are gonna work. And then you go through those meetings with investors, and you hear the same things over and over again, that you're too early, or that when you get to this point, then we'll be serious about talking about getting some funding. And then you get to that point, and it's like, no, the goalposts kept getting pushed out on me. And, in the process of, working in the space, and trying to create in the space, realizing that there were all of these bias that were set up against me that I wasn't really truly aware of, right? And then you hear the dismal numbers with which Black founders were getting funding, right? It's still under 1%. So I'm like, the odds are really stacked here against me. And it's like, I'm living under the weight of this elephant that I'm not going to get funding, right? And yet I'm still earnestly going out and trying to do it. And so that demoralizing experience is what led to the birth of Black Founders Matter. Black Founders Matter was started initially just as a way to raise awareness around the elephant that was in the room, all right, and find a solution to the problem for me. And if I could find a solution for myself that could also help other people, that was the point of Black Founders Matter. So I got started on Black Founders Matter back in 2017. It was just an apparel campaign, and then in 2018 it shifted into a venture fund with that, like in a way that I wasn't even expecting. Like after making national news headlines, it shifted into a venture fund. And so through that process of it turning into a venture fund, and then me wanting to go learn about venture before properly launching the fund, that's how I came in contact with Himalaya Rao, who is my business partner. We were people that were both working in the space. We both did work for Rogue Venture Partners, supporting them in their investments. And we often encountered each other. I was saying this earlier when in our pre-chat before this, that often Himalaya and I were the only brown people in the room when we went to events. And so we gravitated toward each other. And then realizing how hard Himalaya worked, how much I was seeing her, how much we genuinely connected on what our purpose was, I asked Himalaya at the end of 2019 to join the fund to get started on investing. And we both were really dedicated to investing in a very different kind of way. And so now I'll give it over to Himalaya to kind of tell you a bit about how she came to the fund and what it is that we're working on.
Yeah, absolutely. Hi, everyone. My name is Himalaya. As Marceau and Kara mentioned, I am the co-managing director of the Black Founders Matter Fund. I am thrilled to be here and to be able to talk about equitable investment into the alternative investment space. So one of the things that I wanted to talk about, and just as like a brief background, Kara already mentioned that I have worked across a number of venture funds. And so if it's a wide variety of experience, I think that sometimes, you can either go deep or you can go wide, and there's positives and negatives to doing either one. In my experience, because I worked across many different funds doing sourcing and screening, it was really positive for me because I got to be able to see many different types of deal screening and evaluation. But more importantly, I also got to see that there was a huge amount of willingness by GPs and investors to diversify their portfolio. And prior to coming into it, I thought maybe there isn't willingness, and that's why there are unchanged outcomes. Maybe that's why people of color and women aren't getting invested, because the people working in venture funds don't really want to invest in them. And what I found by working in many of these funds was actually there's a huge willingness, but the willingness doesn't translate into changed outcomes. Just even in the last 10 years, you can pull up any number of studies that show that in the last 10 years, investment in people of color and women has remained unchanged. Black entrepreneurs continue to get less than 1% of funding every single year across venture capital and private equity firms. And so what Marceau and I did, and especially in my time there, is I tried to figure out why that is. We know that there's a problem, but what are the underlying causes? And what we found, and what I found through my venture capital experience, is there's two main reasons. The first reason was that there was a disconnect between those who were presenting and those who are evaluating deals. So I know that Kara and Marceau both have talked about how I have a background in venture capital. I want to take a moment and just say, prior to that, I actually was a school social worker in the Bronx, and I have a master's in social work, and I love social work so much. Andy Robbins from Oyster recently did a podcast on that, talking about how social work actually is the foundations of what we're doing here. And I absolutely think that that is true. So my background has really influenced my ability to evaluate and screen deals. And so when I went and I was working in venture capital firms, I realized that those who have different experiences, just like all of you, all of your realities and the way you speak and the way you present is shaped by your experience, your realities, your perspective. And those who have different lived experiences come to a solution differently and are presenting in different ways. And what I found was that investors have a different lived experience and a different perspective and are used to hearing the way in which people pitch in one static way. And so even when there was platforms and competitions and angel groups that are focusing and creating inclusive investing, a diverse set of entrepreneurs were pitching, but they weren't getting investment. And so what I really tried to do in my venture capital career is to try and act as that translator. Because I have both the master's in social work as well as the MBA, I tried to merge those skills to be able to go to investors and say, you're looking for capital efficiency. Let me demonstrate through the prior funding history how they've done that. You want traction. Let me show you through their progress how they've been able to demonstrate that. And when I started to do that and talk in their language, then I started to see material changes in the outcomes of what GPs were investing in. So actually in the funds that I've managed and also the funds that I've worked in the years that I've been there, there's been significant changes to the types of companies that these funds are investing in. And like a prime example of that, I'm proud to say, is Portland Seed Fund, right? And it's because there was a huge amount of willingness, but there was a lack of the ability to access that. And also there wasn't someone coming with a different perspective to say, here's a challenge of how we can evaluate companies in a different way. The second thing that I want to say is that as a whole, venture capital evaluates deals in a benchmarking kind of way. So in order to illustrate that, I'll give you guys an example. So as I was getting like more and more within my venture capital career, I went from just going to venture capital screening calls to leading them to starting to manage syndication calls. And syndication calls, for all of you that don't know, are where funds or firms come together to be able to share deal flow. So I was on a syndication call, and this particular syndication call was all about naloxone, which is used in the treatment of opioid overdoses. And so it was all startups that were, focused on naloxone. And in that screening call and in that syndication call, there was 7 white founders and 1 person of color. And what I noticed is all of those 7 white founders pitched an idea and pitched their venture that just had incremental differences. So in the way they went to market, in their formulaic changes, in their IP portfolio, it was just little subtle differences between the 7. Then there was this woman of color who had worked in the field for a really long time and actually said, I took a 30,000 foot level approach to this and feel like actually the problem here is the problem with mobility and being able to give naloxone to people who are experiencing opioid overdoses quicker. And in doing that, when you think about that for education, right? Like we have coronavirus has certainly shifted education. We can go, how do we do Zoom school? How do we do maybe a hybrid? Or you can take a different view and say, what is the purpose of education? Why do we have institutions of schooling? And when you look at it in that way, the outcome and the solution that you create is radically different than just trying to improve the status quo. So I was moved by this founder. But what was interesting was after I heard her pitch, I saw all the other investors on the call really gravitate towards those other 7 founders. And for me, that was mind boggling. And I was like, I got to figure this out. Like, what is happening here? Why am I the only one seeing it? And when I started to talk with those other funds, what I realized is this second problem. When we talk about venture capital is all about investing in something with the probability and hope that it will return capital. And in doing so, we've created like a grading sheet, a rubric of what is potentially great. And we've based it on things that are already great, right? And then we matched what we're seeing to what we already know. And so if we're seeing a framework for this is a typical startup that's doing well with naloxone, and then we grade all of the other startups against that, then clearly all the other 7 founders will be able to like benchmark, right? You'll be able to say in this category, they're positive, in the other category, they're negative, and you're able to like create a rating scale. But for this other founder, you can't do that. They're totally new. But when we think about investing in innovation, and I know Ruthie had actually published an article that we wrote on that, when you want to invest in innovation, innovation is inherently different. But what we're doing right now in venture capital is we're investing in something that we know, that we feel is safe, that we feel is incrementally better than the status quo. And so those are like the major issues that we saw in when we did our like research, when we worked in venture capital for so many years. Those are the 2 reasons, even when there's a huge amount of willingness by investors, by general partners, the outcomes don't change because there are not people in representation in the leadership of a fund that have different types of lived experiences that can do the translation. But then also there's this benchmarking attitude and pattern matching attitude in venture capital that inherently doesn't allow us to invest in something that's different. And so I want to just pause there. I know that Ruthie might be monitoring the chat and be having questions. And so I will pause to see if we have questions. And then I know Marceau wants to get into how we evaluate, and not just that, but like kind of the problems that we've seen just in fundraising and with people who, you know, are wanting to invest equitably and some of the issues that we've seen around that. So I'll pause and see if anyone has any questions first.
Himalaya, we have a question that came in. Actually, it's from me because I'm curious. So I will unanonymize it. I liked your comment like about acting as a translator and like using historic language and the approach. Does that, like the way we phrased it in this question, like, do you feel like that amounts to code switching? Like, are we really changing the investors or are we changing ourselves?
Yeah, I mean, that's a really good point. And actually, that was one of the motivations for Marceau and I to create our own fund, right? Is to stop being the person who is the translator and to be the person who's in the decision-making chair, and also to bring other people who have different lived experiences to the table. Because I mean, we all have biases, right? Like there's no way to escape that. Every single one of us is shaped by our own lived experience and what we think is like attractive or not. But if we have adequate representation of different types of people who are on the decision making, then actually it starts to counter some of those biases. We can't just turn off those biases and say, well, the same people who have been investors, who have been GPs, let's continue to prop them up and just like control your biases. I mean, that's not realistic, right? We need to get many different types of people in the seat of the decision-making chair, so that way we can start to actually counter and create equitable conditions.
And that brings me to a really nice point, like because we're talking about equitable conditions, and I think it's really important to like really define what it is that we're talking about when we say equitable. So, you know, what like in my research preparing for this, like I like went and did a little deep dive on the word equity and equitable, right? And understanding the difference between our current state and our future state, right? Like equity is defined as fair and impartial. We know that is 100% not our current state, right? That is not where we're currently at. Equitable conditions is defined as treating everyone fairly and in the same way. We know that's not where we're at. So understanding when it comes to equitable investing in general, we have to like first assess and accept that that's not the current condition that we're living in, right? But that's a future place that we're looking to get to. Like, it's Himalaya and I's hope that funds like ours don't have to exist 50 years from now, right? That like we are truly in equitable conditions. But in the meanwhile, funds like ours have to exist as a connector, right? As a way to pull these pieces together, right? As a way to get A to B, as a way to get these great founders, you know, to funding institutions that not only will currently fund them, but can fund them in the future, right? Understanding where those gaps were. When it comes to, and when it comes to investing equitably in general, it's important first to assess what your intentions are, right? As a fund, Himalaya and I had to really sit down before we agreed to do this together and start this relationship of creating a fund. Because when you create a fund, it's a 10-year long relationship that Himalaya and I are in together on this fund, let alone the future funds that we'll do. But we really had to assess what are our intentions in wanting to invest in this space, right? And like, first and foremost, we did not start this because simply we just wanted to give money, we wanted to give money and get funding to anyone that was Black, right? It was really about something quite specific. It was about creating opportunities for equitable conditions and then to evaluate our entrepreneurs in a robust and new way, right? So by us existing, this creates a much more equitable condition for Black entrepreneurs, that there is now a fund that there's people that look like them, that represent them, that are also the decision makers, right? We're not just like, we've both been the associate who's able to bring this up, but the higher ups are deciding. Like, no, we're actually able to make those calls, make those decisions when it comes to investing. And then looking at how we evaluate the companies. But Himalaya talked about this concept of benchmarking, which is very common in how venture capital looks at companies, right? But if you're benchmarking, if I were to be benchmarking basketball teams and how they function, and then now I want to like pull a lacrosse team and like evaluate them the same way, it's a different sport, right? Recognizing that Black entrepreneurs specifically have different lived experiences, have different ways of articulating their ideas, have different ways of looking at solving problems, means that they're not going to benchweigh in the same way that a white entrepreneur who was raised with an entirely different network and lived experiences is going to express that. So we of course would not use that as a way to evaluate and look at companies in general. And so we had to create a new way of looking at that, because as a fund, like for Black Founders Matter, we're industry agnostic. We're investing in the Black vertical, we're investing in Black entrepreneurs, but we're not looking at one specific industry, and which is very non-typical for a venture fund. But we figured out a way that it made sense for us to be what we refer to as like this connector, a connecting fund. Now, one of the things that we're weary of, and that we notice when it comes to investing, and that's why I started out with talking about what intention is about, is sometimes people come into this space of investing equitably as if it's charity. And we've come across investors who are like, I don't want any returns. I don't even know what we're talking about. Like, we've come across investors who are like, oh, I just want to give this money. And it's like, the importance of starting this fund for us was not just to get money to Black entrepreneurs. It was that we were seeing there was a huge gap in the market where these entrepreneurs were being left behind, and millions and billions of dollars were being left behind with them, right? Like, the point of creating this was seeing the level of opportunity that was there with these deals, right? And when it comes to looking at how we look at my notes here, something like looking at, like, we didn't want to miss out on the opportunity to when it came to scalable deals, right? And when it came to creating a fund that was hyper focused on the Black vertical, we created a space where founders didn't need to feel like they were being tokenized, right? Didn't need to feel like they were filling some kind of quota, or like, well, they have a mandate to give money to Black entrepreneurs, and I guess maybe I'm that thing for them. Black entrepreneurs needed to feel mentored, need to be mentored differently, right? We had to realize that a big part of doing this fund was around listening to Black entrepreneurs. It was around listening to ones that had experience, ones that have exited, that have gone through that process, like at every step of the way, in order to like assess a full plan of like, hey, here's all of the needs that we have. Here's all the needs that Black entrepreneurs have, and like here's ways that we can actually fill that out for them. So we went through a rigorous process of really educating ourselves and figuring out how we could support these entrepreneurs, because it was important to us for our intentions to be set in the right place.
I know this isn't a fireside chat, but I feel like providing a little bit of context for folks that maybe aren't as familiar with some of the things like the Oregon Growth Board. Like, so what you said, Marceau, about like, this is not a charity. The Oregon Growth Board does not invest in you unless they think they can get a return. Like, that is a mandate that they have to make money off of it. And so like, that's an interesting thing, I think, to point out to folks that maybe aren't familiar with that. It wasn't a donation to a 501c3. Like, they have to make money in order to give you money.
And it was a rigorous process going through with the Oregon Growth Board of months of vetting us as a fund to see like, and vetting our entire thesis of how it is that we're going to invest, whom it is that we're going to invest in before they gave that investment to us. And so seeing these deals as being viable, seeing these deals as being scalable is an important part of the intention of investing equitably. It's not like charitable giving. And so understand that like investing equitably is not charitable giving. They're different things.
And I do want to just like jump off that and say, there are many, I mean, when we think about equitable investing, when we think about correcting systemic issues, there is no one way to correct a systemic issue. It exists because it's systemic and it has multiple facets that have contributed to it. So we want to be really clear in saying like, we are not solving all of the systemic issues of racism that are deeply rooted in this country. This is one way in which Marceau and I have chosen to be able to elevate a community by seeing the strength of that community and saying, we want to be able to invest in that community, to be able to create a world in which different types of people are able to be problem solvers and contribute to the whole. When we think about, I mean, I'm sure all of you have read articles by the Harvard Business Journal, and they detail like time and time again, the qualities it takes to be a successful entrepreneur. That really is like the core of what we're doing here. When you look at every single time, whenever they do those studies, there's resilience, there's capital efficiency, there's resourcefulness, there's the ability to pivot and be coachable and marketable. Well, all of those qualities we feel like actually exist in Black entrepreneurs. And through their vastly different lived experiences, they're actually able to come to the table with many different types of solutions that could benefit us all, right? And so that is the thesis. We're not doing this because we feel bad. We're doing this because we see a strength of untapped potential, and we want to invest. And so one of the things before I like close out on the evaluation piece, it's really important to us that we state that our evaluation criteria is not just something that Marceau and I just like, we were in a backyard one day and came up with, right? This is actually built on years and years of what works. So I'm gonna put a link in the chat to a book on effectual entrepreneurship. If you're an entrepreneur on this call, I highly recommend that you look at that. Effectual entrepreneurship, a lot of times there's frameworks that are built and then people are like, go do this framework, it'll make you successful. But like, who are those people who are creating those frameworks? And do they work for everyone? And what I really like about effectual entrepreneurship is it's actually built based on the people, right? So it was built on years and years of doing research among different populations of how to be successful entrepreneurs. And then a framework was built around that. And that's one of the guiding principles that we use when we've talked about our evaluation criteria. And then actually, I have tested this. Not only has it been tested to be able to be a framework, but then I went ahead and in all of the 7 funds that I worked in, I used this as an evaluation methodology and saw material changes in the ways in which we could filter in innovation. So this framework starts as like the basis and the fundamentals of how we started to create our deal screening evaluation method. And I encourage entrepreneurs to take a look at that. I'm sure we could do a whole talk just on effectual entrepreneurship, so I won't get like so much into it, but I highly recommend that. The thing that I want to bring our conversation to now is our fund strategy. So we've talked about how we're being really intentional in who we're sourcing, how we're screening deals, but the other part of that is how we're running the fund. And even in that, our fund strategy is so different. And the reason is because of our experience. As I mentioned, when I was working in venture capital with many different funds, I was that translator between two parties, right? There was a willingness by GPs of small funds to invest in early stage startups. And so I helped them get there. What we found in this space is that it's the exact same thing on a much larger scale. Series A and Series C and further lead firms want to find Black-led deals, but can't find them, right? Like there are amazing industry-specific funds, like our partner Energy Foundry Group, that is phenomenal, right? And they have so much deep expertise in clean tech sustainability, and they know how to really evaluate those companies. They know how to drive those companies forward post-investment. And they're like, we can't find any sustainable deals that are also run by Black founders. And that's where we come in. We have partners with seed stage and Series A lead firms who are industry specific and know how to drive companies forward, but lack the ability to get access to those deals. And so what we do is we create formal partnerships with them. We do what we do best, which is we know how to source deals by Black founders. We know how to create intentionality around the evaluation process. And then we bring those deals to our partners in those specific verticals and then co-invest together. And so that's been our strategies. And that's what Marceau mentioned is we are a connecting fund. We are not the biggest fund. We, for sure, I'm sure you guys have seen that on the news. They're $100 million funds. We are not that big yet. But what we are and is what we do is we focus on what we're good at. And what we're good at is sourcing incredible, scalable, profitable Black-led deal flow. And then we use our partners to be able to provide their expertise in a specific vertical metrics to be able to drive them to the next funding round. And the reason we do this is it's not about just capital, right? Like you can't just throw money at a problem and say like, now we fixed it. There are so many underlying issues of why Black founders don't get to raise subsequent capital, why they don't get to be acquired, why they maybe are acquired too early. And we've created partnerships with many different funds along that pathway to be able to create intentionality in an entrepreneur's journey. And so that's a lot. And I will pause just to see if anyone has any other questions.
I'd also say, y'all, this is a really engaging conversation. So if you would like to unmute and ask a question, I don't need to be in charge of the question list.
And also, I mean, while you guys are thinking of questions, one of the things that we noticed is our fund actually mimics one of the investments that we made, and I will let Marceau kind of go into one of our most recent investments and how that parallels our fund strategy.
Perfect. Yeah. I'm going to start telling you about year one, which is a great startup here led by two brothers here in Portland. And what their strategy as their company, and this is one of our most recent investments, is they've created a pipeline for diverse engineers that are in coding schools that need a career path, right? They're going to these coding schools, but the point is for them to get a job. But how do they do that, right? Because not most coding schools don't necessarily provide job placement afterward. Now, so that's one side of the market, that we have all these people going to coding school and they're looking for work. Now you have corporations that have these mandates to hire more diverse engineers, right? But where do they find them, right? Like a headhunter is not enough when it comes to finding that, but the headhunter probably doesn't have the network to help you find the diverse entrepreneurs the diverse engineers that you're looking for. So what year one does is they've created this bridge between the two, right? Year one has created a relationship with a significant amount of coding schools around the country, creating career paths specifically for all of their diverse engineers to go and work for big corporations that are specifically looking for them, right? And they've had an immense amount of success in being able to do that because these corporations have these mandates. They want to hire these diverse engineers, but they don't know these diverse engineers. They don't have a way to connect to that community. And yet we have these two Black entrepreneurs who are like, okay, there's a huge opportunity here to create this connection, and they're growing at a really rapid rate. And our fund functions in a very similar way. Like Himalaya said, what we're able to do is we're able to source the deals, right? We're able to find incredible entrepreneurs because we work in this community, because we are a part of this community, right? And then we're able to say, well, because we as a fund are industry agnostic, we realize that like it's important for us to ensure that the entrepreneurs that we're investing in are getting the resources that they need. So it's like, wait, if your industry is clean tech, we work with incredible and syndicate with incredible investors that specifically focus on clean tech. So how about we create this relationship much sooner, where they co-invest with us early on, when and where we invest. And now this is also the person who will lead your seed round and your A round, right? Because they write checks at that size. So it really was about creating this level of connection much earlier, right? We were able to see the opportunity and not see it as charity. One of the interesting things that Himalaya has been able to do in her work at the Portland Seed Fund is be able to source great deal flow for them that are led by diverse entrepreneurs, women and people of color, right? And since coming onto that team, all of the deals that they've invested in diverse founders came from Himalaya, right? Even our first investment, a kid's book about, is something that like I brought to Himalaya and Himalaya brought there, and we've all invested, and we're so excited with the progress that a kid's book about has made. Other funds are able to defer to us when it comes to being able to evaluate these deals and connect them with deals that they don't normally see, right? But they are interested in investing in, because you have all of these funds that have a mandate that are like, we want to invest in more Black entrepreneurs, we want to invest in more diverse entrepreneurs, and we like we said, the willingness has always been there. However, the actual mechanics of doing it is where things have gotten caught up, and that's why it's important for funds like ours to exist and take the lead on this space, right? So that the funding that exists out there can actually get to these entrepreneurs, and we're able to participate in it at the same time. We are able to, our fund exists at the nexus of where opportunity, equity, and profit all exist. All of those things are a part of investing, right? When you invest in something, you're expecting to get a profit back, right? That has to be a part of the conversation. It's about investing in these entrepreneurs because we believe that not only can they scale and create the products that our society needs in general, but also that it will bring in those returns. We're not the biggest fund, but we're a connector fund, and we are able to bring these great deals, to the people who are looking to invest in the Black vertical, right? That is the function that this fund one has been for us, and we had to really figure that out of like, this is where our strength is that we're able to find these deals, and then we're able to bring our syndicate partners on to co-invest in the space. And so really for anyone or individual who's interested in and look in more ways to invest in an equitable way and invest in this community, we're happy to be a resource. We're happy to connect you with resources when it comes to investing in a more equitable way. And so with that, we really do want to open up the floor for questions and for some more dialogue around the subject. If there's any pieces that we hit on that you have questions or just comments about, like, please, let's make this interactive.
And I do want to quickly just state, I think this was like one of the comments in the chat as well. So I just want to pick up on that thread. When the focus of this conversation is, or how do we invest equitably? How do we support equitable funding? And one thing I do want to say is, if the conversation were flipped and we wanted to say, how do we invest in biotech? I think the question would be different, right? We would naturally say, well, let's find experts in biotech. Let's find people who know how to invest in biotech. And oftentimes the same logic is not applied to diversity. We think, oh, well, if we want to invest in diversity, let's just go do it. But we skip the step of, let's invest in companies, in people who have done a lot of research and intentionality of how to invest properly in different diverse demographics, right? And so I think oftentimes that piece is really missed. I mean, there's a huge amount in DEI where people skip that step. There's amazing people who are taking the time to do research, who are taking the time to have lived experiences to share that information instead of bypassing those experts. I think it's really helpful, as Marceau mentioned in the beginning, when we talk about current state, future state, if you want to invest equitably, invest in those companies and firms that are bringing us from current state to future state. Don't just feel like, oh, I have the expertise to just do it on my own. You wouldn't do that if it was anything like biotech. You wouldn't just take it upon yourself to say, oh, well, I have a willingness, so I can do it, right? There are certain pieces there that are missing. I know that, Corey, you had unmuted, and I want to make sure I hear from you, and then we have a question in the chat.
So I appreciate that. And let me take this hand clap thing off. But look, I just wanted to say two things. Number one, that both of you are incredibly valuable to the entire sort of building of healthy ecosystems for Black people and brown people and other excluded people in our land. And so I just want to tell you, I learned more in this last 45 minutes, except for the makeup thing. I learned more in the last 45 minutes than I have in, just maybe the last year in my own journey. And so I just really want to applaud both of you. I want to learn with and from both of you, and really just thank Kara for hosting this. I caught this last night and woke up this morning with crust in my eyes and wanted to make sure that I popped in because this was such a, I watched the journey of, kind of looked from afar and just read about Black Founders Matter sort of journey. Marceau, I just want to say again, thank you for not giving up. Thank you for pivoting, and both of you for all this work. So I appreciate it. And I'm a hop off, but like I said, I just really, really, really want to thank you for this, and please keep going. And I look to connect with you another time.
Yeah, we would love to connect. Something that Marceau mentioned that I want to make sure is restated again. This is not just something that Marceau and I came up with. We have taken frameworks from experts who have been researching and doing this, and then also taken that and tested it out over the last 5 years in order to build a very intentional framework, but we are not done, right? We are absolutely not done, and we look forward to hearing from you because we always think that we can build something better if we work together. So we're absolutely open to hearing from you and figuring out ways in which we can do things in an even better way.
And as a fund, we, it's really been about, I think that often we talked about this concept of benchmarking, right? Which is about sameness, right? As a fund, Himalaya and I are not like any other funds that we know. We don't know a lot of, we're very specific as, a BIPOC queer-led fund, right? We have to embrace what we are as being different and like embrace that we take a different approach to looking at companies. And like this is the thing, in the same way that we have to value the innovation in the entrepreneurs, we have to be innovative at the same time in what our approach is. And so, and that's been one of the biggest learning curves of doing this fund together is like, as we keep going, it's like our thesis when we first started and our thesis now is different, right? Because it was like, even as we started our process of investing in the companies that we look at, like right now we're in the middle of 3 really great deals that we're getting into, and companies that we wouldn't typically have thought like, oh, this is something that we'd be looking at, or this is a deal at a stage that we thought we'd be looking at. But really, like as a fund, we are opportunists, right? But we are looking for great opportunities to move the conversation forward for Black entrepreneurs, right? To see more exits, to see more meaningful exits happen for Black entrepreneurs. Because like Himalaya said, sometimes what happens is people end up, get taken out of the game early. Like even Black entrepreneurs, like we had a great conversation with Jewel Burke, right? Who, thank you so much, Cara, for connecting us. And, and she's someone who's had an immense amount of success, but it's also like, yeah, I feel like I exited early, right? And I'm glad, and she's been able to do incredible things, but like, sometimes people get put in these situations where, and it's like, well, how do we not only how are we not only able to invest in these entrepreneurs, but also invest in what makes sense for them? Something that Himalaya hasn't told you is that a lot of times Himalaya will look at a deal that look at all the legal documents for a deal and be like, this is not conducive for the entrepreneur to actually be able to have a meaningful exit, but actually be able to have enough control over their company, and will actually get the documents changed in favor of the entrepreneur. And that's the important part about equitable investing, is not just about getting the money to these entrepreneurs, but also giving them the leg room, giving them the arm room to actually be able to build out a company in a meaningful way that they want to.
And I know we have one question in the chat that we haven't talked about with Charmaine. Thank you so much, Corey. We appreciate it. So Charmaine, you talked about, and I'm sorry if I pronounced your name incorrectly, please correct me. You talked about what type of mentorship and coaching are we providing our prospective and portfolio companies. So that's actually a huge piece of what we've talked about. So when we talk about building that out, we've created an intentional venture partners model to be able to do this. So we do this in two parts. One, on an institutional level, because we're specifically partnering with industry-focused vertical investors, one that provides a huge benefit to our portfolio companies, because if you think about like one of our partners, right, one of the people that we've co-invested with before, Trail Mix Ventures, out of New York, they are focused on consumer products. Since this is what they do, they also know the metrics that are needed to get a company from Series A to Series B. They also know all of the players in Series B. And so they're able to create that pathway for funding and create operational plans to be able to help get those companies there. But when you talk about other types of mentoring and coaching, the other thing we've done is Marceau and I have seen this, right? Like we work in the venture capital space, and oftentimes we have mentors that don't really get us or understand where we're coming from. And so we felt like it was really important to build out mentors and coaches that really could connect with our entrepreneurs where they're at. And so what we've done is we've created a venture partner model, and we've onboarded several mentors who have exited companies, who both have gone through that entrepreneurial journey. And here's where I want to say is like a huge piece that we really haven't covered yet. When we talk about investing in diversity, investing in equity, we often think of like the superficial sense of like, let's get a bunch of people who look different into a room together. But oftentimes what we see is all of those people actually have the same background. All of them came from a middle class background. All of them maybe went to an Ivy League education. And now they're here, and they may look different, but that doesn't necessarily mean that there's any diversity of thought there, right? And so what I really encourage all of you to consider is when you're thinking about investing in equitable conditions, really force yourself to see what is the intersection between race and socioeconomic status. Because that can really give you an indication of like, what are the true different lived experiences that are in the room. It's really important to us to be able to surround ourselves with different types of lived experiences. It's not just about race. It's about that lived experience that gives you a different vantage point, that then gives you a meaningful and valuable perspective that is different than everyone else's. And so that's what we've done even in our mentor pathway. We've created a pathway with people who have exited, but also people who came from different generational wealth patterns. And we feel like that is critical to being able to provide our portfolio companies with different levels of mentorship.
And for example, like our first investment, A Kid's Book About, it's interesting, like when we talk about like what the nexus of our fund is, and it really is about where opportunity, equity, and profitability meet. When we invested in A Kid's Book About, they were doing about like 60K a month in sales. They were really early, and it was really promising. I brought this deal to Himalaya, and Himalaya initially said, no, they are making books. There's no way that this is publishing, and it's a shit business. And like, this doesn't make sense. I'm like, well, let's actually like really like, right? Let's really evaluate what this looks like. Let's listen to this entrepreneur. Let's listen to how it is that he is creating his company. And so So we had a meeting with Jelani, and I had known Jelani because I was a part of Pi, and like Jelani came to me back in 2018 when he realized that I was raising a fund. He's like, I'm doing this, I'm creating this book. I wrote this book for my kids. He showed me the first book, a kid's book about racism, and was like, I'm going to create a whole line of books that help families like go through these tough conversations with their kids in a way that really respects kids' intelligence and not just puts a bunch of pictures, but actually lets kids see themselves in it. And so he said, I want you to write me a check. I want you to be one of the people that writes me a check that invests in this. And I was like, it's the book. I read the first book, and then I read the book and I was like, oh my God, this is amazing. And then, fast forward, a year later, I bring this to Himalaya, and Himalaya's like, no, but we looked at the deal and we realized that like how capital efficient he was, how much early success he was having in self-publishing these books, doing this with like in a net 30 model where they didn't have to pay for the books up front, was really innovative and really made sense in a venture way. What have we seen with the kids' book about since? Like we've seen like 1,000% growth in them, right? Like, they went from doing 60K a month to closing out the 2020 with over $4 million in book sales, right? And there's gonna be a really interesting article that we're really excited about that's coming up next month that really highlights the innovativeness of their overall company. And they're an example, we're so excited that we got to invest in them. They're an example of the level of opportunity when we invest in entrepreneurs that are doing things in a way that we don't usually see them being done. And so like, that's the thing is that like, it's interesting that after we finished that investment, so many people called us and was like, hey, can I get in on this SPV that you're doing? And it was like, no, it's already closed. We're already in that investment. And we're actually about to re-up and invest in their next round that they're raising right now. But there's such a high level of opportunity, right, when it comes to this space. And that's where we get excited. That's where we're like, that's where we're willing to be spent in behalf of doing this, is because we're not just doing this because it will only just move the needle forward. It's like there's so much money being left on the table. There's so much opportunities being left on the table. And like our world, in order to envision the world that we really want to see, we need more people solving problems.
I love the kids' book about, and I love that you invested in them. And Himalaya, I love that you were like, the book business, what are you thinking? And then like the flip side of that story is when I texted my sister-in-law and was like, hey, the girls are getting a kids' book about racism and a kids' book about feminism. She was like, oh, thank God. Every time I've tried to order, they're sold out. And I'm like, that is the exact narrative we want to hear. Rochelle, you're unmuted, and I didn't know if you wanted to ask a question.
I did. I think, first of all, I want to let you know, I really appreciate you having this. And I have a question. It's a tough question. I think in part it's been answered by the presentation. Himalaya, you went into how the story is told differently from a different perspective. And so I've always thought of myself as a visionary, and I've changed my mind about that. Sometimes I think some people just lack vision. It's not so much that I'm a visionary, it's that one way has been taught and they'll repeat that way again and again and again, and not take into account the generational knowledge and the lived experience that someone comes with. And so it makes it hard to translate your story into a story that's marketable. I'll give you an example. And I need to learn how to do this because I just spent my life savings. So on a farm, I have no farming experience, but I'm the first generation off the farm, second generation off the reservation, and everybody in my family was a farmer. But when you put it on paper, it's really hard to get a loan off that, you understand? So I've tended to just go off and do it, and then say, look at what I've done. That's a really hard way of living. I've managed based on that resourcefulness you talked about. So I would like to know, and this might be an impossible question, how do you get folks to take you seriously without having to invest $250,000?
We lost sound, right? Like, okay, Rochelle.
Just as you were getting to the meat, like the question.
And we're frozen. Okay,
I froze. Yeah.
We'll
okay.
Okay.
Oh, you're back, Rochelle.
All right, Rochelle, you're back. Just give us the question again. Like, how do you get to, like, how do you translate, or like, give us the question again, Rochelle, please.
How do you create that credibility for someone who tells their story or would tell your story differently? How do you get to translate your lived experience, your generational experience, your knowledge, and productize that in a way that doesn't necessarily devalue the offer, because the innovation is in the offer. So if I change that story, it becomes like the other 1,000 stories out here. So my story is so unique, you can't even find it. And I do that on purpose because I'm petty and because it's in my DNA. I'm just, if I do something once, I won't do it again. So I want to always be unique, but sometimes that's not the way business is done.
And I mean, Rochelle, one, I want to say that your story heavily resonates with me and also with what I've seen. And this is why I truly believe in investing in people of color, because of that notion that when it's historical that your story doesn't translate. And so then it's really natural to be like, okay, I'll just go do it on my own and I'll show them through results that what I'm saying works. And that is a really tough road to navigate and to continue navigating. And it's an experience that I think a lot of people of color face. And that's why our fund exists, is to be able to say, actually, we see you and we can understand, and we are here to be able to listen to your story and value it in a different way. We understand that traditional venture capital and society can't hear your story because there's not enough representation on the people who are in the seats listening to those stories. That's what we aim to do, is we aim to diversify the number and the types of people that are listening to stories. One, I will say this is like a huge thing of what I do and what I have done in the last 5 years is I have talked with entrepreneurs and been able to create a narrative that is then translatable to other investors. And so one, Kara has my information. I'm happy to have you connect with me. We can absolutely talk, and I can do a full screening of your company, as I've done for many entrepreneurs, and be able to kind of guide you through that process. And Marceau just put it in the chat as well. Thank you, Marceau.
And I'm putting mine in the chat too. So we are at 10, but I had one more question, and I know folks are having to drop, but are you able to share the names of VCs you're partnering with, or is that confidential?
No, we certainly are. There's actually a huge list of VCs that we're partnering with that are industry specific. And so actually, if you email me, we can set up a meeting because we can talk about the different verticals that people are interested in. And we actually have that on our deck.
All right. I think the person that asked that question is still on the call. So we'll make sure that they are aware of that. I actually hate ending this. This has been a robust conversation. It has been an amazing learning opportunity. Like, I talk to you all both regularly, and I still learn every single time I hear from you. So thank you for that. Thank you for everyone that's been here with us today. I know we can't really make the clap sound great, but we're going to give you a round of applause.
Thank you so much for having us. We really appreciate being able to do this, being able to, like, we had fun. Himalaya and I had fun preparing this and practicing it. And we really are here to be a resource in the community. We realize that we're a connector, right? So that means that we're not only a resource to the amazing entrepreneurs that we respect and that we're working our asses off to get funded, but we're also a resource to these funding apparatuses and to the investors that come into our fund when it comes to understanding this space, and also deferring to someone who's specifically working in this space with the level of authenticity that we are trying to work with.
Well, you all bring authenticity real every single day. Himalaya, do you want to add anything before I close this out?
I just wanted to truly say thank you. I think Marceau wrapped it up really nicely where he said, Like if you want to invest in equitable conditions, then invest in people and companies that are doing that very intentionally. And we just want to thank you, Kara and Ruthie and Skip, for your partnership at TAO. We feel like it is truly a partnership where we bring our unique strengths and then work together collaboratively. And so we just really want to say thank you so much for this partnership.
Oh, you're so welcome. We feel the same way, which is why I dropped it in the chat. And thank God Ruthie is better at details than I am. We're super excited to partner with you all again in April, on April 15th. Unfortunately, you probably won't see Marceau and Himalaya because they are bringing some of their founders to talk to you all about different fundraising strategies. And so we have an awesome lineup. We're confirming the time and one more founder, but I've had the opportunity to speak to the two that we have so far, and it's really exciting. And be on the lookout for a Kickstarter campaign that we're going to help promote as one of the founders' fundraising models. So everyone have a really great day, a fabulous weekend. If you don't have power wherever you are in the country, I hope you get it back. If you do have power, I hope you get to relax this weekend. Thank you all so much for your authenticity, graciousness, and for everyone that was here. We had a really nice time, and I cannot imagine a better way to wrap up my week. So with that, we will say farewell and everybody stay safe.
Take care. Thank you. Bye.